Hello, everyone. I'm thrilled to welcome you back to another exciting episode of our weekly series dedicated to price action based technical analysis. Today, we will be doing a follow up on the XAUUSD chart. And remember, our previous trading setup resulted in a remarkable gain of over 600 pips. In fact, gold price rallied on increasing geopolitical tensions in the Middle East and hopes that the Federal Reserve will not be raising interest rates any further this year. Well, at the beginning of the previous week, we initially observed, as you will see here, price action confined within a specific range between the 1,885 and the $1,846 zone before the breakout of that resistant line triggered our first buy position for the week. And since then, with multiple entries, we have been buying gold as price advances to new highs above the 1,900 zone at the end of the week. A detailed breakdown of our decisions throughout the course of last week is well highlighted in the commentary scrolling on your screen right now. If you wish to review these commentaries for educational purposes, you will find the link in the description box below or at the top right hand corner of your screen if you are watching on my YouTube channel. As we prepare for the upcoming week, I have conducted a comprehensive analysis of the current market conditions using simple parameters such as trend lines, key levels, and chart patterns to gain insight into the historical movement within the XAUUSD market. However, please keep in mind that this video is purely for educational purposes and should not be considered as financial advice. My aim is to equip you with a deep understanding of the XAUUSD chart and enhance your proficiency in price action analysis. Remember, Forex trading carries inherent risk, so always exercise caution and consider consulting a professional financial advisor before making any investment decisions. Now, with our foundation well laid, let's dive right into the business. Here on the 4 hours time frame, price action on the daily time frame, price action has finally broken above the 1,900 zone, marked by a powerful engulfing bullish candle, as you will be seeing right here. And this happened on Friday, setting the tone for a bullish setup ahead of the new week. Now, what is fueling this optimism here? Well, it is a combination of deepening tension between Israel and Hamas and the growing consensus that the Fed might hold off on further interest rate hike this year. This has led me to adopt a bullish bias, but there is the $1,000,000 question. Where will this momentum lead us? When will it happen? And how? To tackle this, I have identified a simple yet effective setup on the 4 hours time frame. This setup will serve as our guideline for making well-informed trading decisions throughout the upcoming week. However, before we go into that detail, it is essential for every trader to be aware of the upcoming economic events that could significantly impact the current market structure. This event acts as a pivotal point shaping market sentiment and influencing price movements. So on the economic calendar for this week, I was able to pull out a couple of high impact events we shall be looking at. And based on the asset on our watch list, which is the Goldspot, we are going to be focusing on economic features from the United States. Now, the first high impact event for this week is coming in on Tuesday, on the 17th of October. And this is the retail sales data, which is a measure of consumer spending on goods, indicating the health of consumer demand and economic activity. So this is one event that we are going to be looking out for next week. And of course, as technical traders, we know that the anticipation of this event alone has a tendency of influencing market sentiment, which would reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, where I mentioned earlier that I was able to identify a simple setup that we are going to be using for this week. Now, if you look at this structure closely, what I did here was to take into consideration the nature of price action in the last couple of months, to be precise from August till this present moment. And the first thing you would observe here is that key level, which I was spotted on the daily time frame here, and that is the 1900 area. Now, if you look at the structure, this key level here had played a major role in determining the direction of price action since the month of August. Now, in the month of August, I think most of the part of the month of August and I think some of September, we saw how this zone at the 1900 area had played a major role for buyers in this market. So it's serving as a demand zone, as you will see right here. And not until the last week of the month of September that we saw price break back down that structure, inciting the strength of the sellers at that point in time. However, based on what happened at the end of last week, we have a situation here where price action is back above that key level at the 1900 area. Now, with a couple of engulfing candle right here on the 4 hours time frame, I'm of the opinion that price may continue to the upside. Now, if you look at what we saw on the daily time frame, we had a descending trend line. Let me show you one more time so that we can just be on the same page here. So we can see we have a descending channel after connecting the series of lower highs and of course the series of lower lows here. And scaling back down into the 4 hours time frame, you will see that price appeared to have broken out of the resistant line of that descending channel. And when price breaks out of a resistant line of a channel, it's a sign that the resistant may no longer have the capacity to continue to negate the bullish attempt. Now, in this case scenario, when are we going to start buying? Now, price is back above the 1900, which happens to be a demand zone before. The question at this juncture is, will price action retrace back into the 1900 or the resistant line of that descending channel to incite an uptrend scenario? Or are we going to be witnessing the breakout of this 1930, which is exactly where price action closed at the end of last week to incite the uptrend continuation? So you would agree with me that with the information we have on this chart right now, we are at a crucial juncture in this market where, depending on how participants in the market react to the 1930 zone at the beginning of next week, will determine what our next line of action will be. And trust me, I'm going to be with you in the comment section of this video to give you an update after we have monitored how participants in the market will be reacting to this area during the early hours of the week to give you a sense of direction. So I'm going to be pausing this video here until next week. And if you have found this content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are very valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel For more of this content, by subscribing, you would always stay updated with the latest ideas I share and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.